Guys, welcome back to the weekly commentary. Now, what I'm looking to do today is just go through the key fundamental developments that are driving price action at the minute. We'll have a look at what's changed from a macro perspective and sort of what I want you guys to keep an eye on going into the remainder of this week, right? Now, I will go into a bit more chart analysis, but I do just want to give you guys the sort of fundamental updates first, and then we can go and look at the charts, right? Because technical analysis means nothing without some form of narrative and some form of directional bias, okay? Now, I know a lot of you guys do trade EU and GU, so I thought this would be fairly interesting. I found an article on essentially inflation expectations, right? And I thought it would be very, very important to show to you guys to sort of get my point across regarding risk sentiment. Now, a bit of context. Inflation expectations within the Eurozone they've ticked slightly higher, right? And what is that driven by? We know that this is a result of these markets, right? Oil prices, these rising energy prices, and this entire ongoing geopolitical tension between the US and Iran, okay? So, let's actually have a look at the Reuters report. It was this, okay? Now, essentially, the main thing I want you guys to keep a note of here is this, right? With energy prices rising sharply, the ECB is keenly watching how firms react, ready to jack up borrowing costs on the first signs that an energy-driven inflation surge will start pushing up wages or longer-term price expectations. Now, what's the key thing here? The key thing here is that they're keenly watching how firms react, okay? From what I can decipher from that, what I can infer is that they're slightly cautious. They're cautious in their approach to their rate path, okay? And I feel like this is the same across the board. I mean, globally, there is a more cautious to hawkish tilt with these central banks, right? But also a very important factor is that they are ready to jack up borrowing costs on the first signs that this energy-driven inflation surge does have a more longer-term effect, okay? Now, sort of brings us to this economic calendar. It's a pretty stacked week. We have a lot of rates being printed, of rates being released throughout the course of this week. Understand that most of these will remain unchanged, okay? Rates are predominantly going to remain unchanged. Why? That links it back to this initial report that I was showing you guys of most central banks at the moment. They're not looking to react just yet. They're waiting for signatures. I mean, think of it. I'll give you guys an analogy. Think of it as you're actually trading and prices come to a higher time frame point of interest for you, right? Prices reach this level and you're waiting for signatures in price to show you that you're looking to engage in the market and you need to act, right? It's the same with these central banks. They can't just blindly to react to this entire ordeal. They're gonna wait for these signatures first, okay? Wait for signs of a longer term shift, okay, in the inflation outlook, okay, in price outlooks. Now, back to the economic calendar. One thing that I really want you guys to understand is, okay, they are going to remain unchanged. I mean, I'm pretty sure there's a 95% chance that they remain unchanged. If there is a change and one central bank does decide to increase rates, that will be a shock to me and a shock to everyone, okay? But just because they're keeping rates as is, that doesn't mean we have no information to use to form some sort of a trade opportunity. Okay, what I'd say to you guys is have a look deeper into the monetary policy statements. Have a look at which members and how many, in fact, voted in favour of a rate hike. Okay, I'll give you guys an example. So, Bank of Japan, right? They kept their rates as is, okay? Voted for a hold. The majority voted for a hold, right? 6 voted for a hold, and 3 members actually voted for a rate hike to 1%, okay? From my knowledge, that wasn't expected. It wasn't expected for 3 members to vote for a hike, okay? Now, I'll give you guys something to sort of compare that with, just so you guys can understand my thought process when I'm going to look at these financial assets, okay? GBP. You can see the MPC, the Monetary Policy Committee official bank rate votes, okay? Previous print was 0 members voting for a hike, 0 members voting for a cut, and all 9 members of the MPC looking to hold. With this entire sort of supply shift and the supply shock, shall I say, you can see essentially we're pricing in one member looking to increase rates and the other 8 looking to hold. Okay, if we see a shock to this now and more members looking to increase rates, there could be upside pressure here. There could be upside pressure in the pound sterling, right? And of course, you would use that with other currencies who may have had a less hawkish print in their policy reports. Okay, so that's what you need to use. That's what you need to sort of decipher. Use this data to sort of gauge which central bank is more hawkish than another, because globally they are all holding, they are all still cautious, and they all do have some form of a reason, shall I say, essentially, to increase rates. Okay, but if all of them do, that sort of undermines the effects of a rate hike. If every central bank is increasing their rates, you can see that. I mean, the effect of a rate hike then essentially is mitigated. Okay. Right. So, like I said, this week is fairly data heavy. We've got US GDP, core PCE inflation, some major PMI releases, and of course, if you're in equities, big tech earnings. Okay, if you're in stocks of that. Now, where my eyes are kind of being drawn to is that PCE inflation number. Why? Because it's particularly important purely off the fact that it's the Fed's preferred inflation gauge. Okay, so we're going to see off this data print of PCE, it could be very telling of how the Fed looks to react. Okay, and of course that's understanding how they are positioning themselves in their rate path is it will have dramatic effects on the market. Okay, if we can understand it, we can get in line with that and profit fairly well, right? Now, essentially, any upside, this is what I would kind of tell you guys, right? Any upside surprise to that PCE print. So where is it? Let's actually find where's that PCE print. Okay, 1:30 on a Thursday. Essentially, it's being priced in and forecasted at 0.3%. Okay. 0.3%. If we see upside surprises to this, and it comes in even potentially higher than previous, that could be the factor, or shall I say, the one thing that changes these rate expectations. It could reprice these rate expectations fairly quickly. Okay, because markets at the moment are still currently pricing in a relatively stable inflation path. Right, so it's these surprises to these data prints is what matters to us as traders. Okay. Now, what are the key risks for this week? The key risks for this week, right? This is essentially what's going to move markets, right? It's the Fed's decision and the Powell press conference. In my personal opinion, the Fed decision with their rate, the Fed rate is most likely going to remain unchanged. It's more so geared towards eyes on Powell, right, and his press conference and what he decides to do. Okay, if on a bit of an informal note, I do think that Powell is probably just going to be more hawkish than ever to piss off Trump, but that's neither here nor there. Okay, react off of information, don't react off of anticipation. Okay. Then we've got the core PCE inflation print. We've got US GDP data, which would also be a very good gauge for understanding the general strength of the economy, right? And of course, the ECB and the Bank of England's policy tone, right? We're looking to see how they move, right? And I mean, I don't really think I need to say this, but of course, if we do see any sort of geopolitical escalation, right, that has a direct impact on energy supply. What is that going to do? I mean, these markets will absolutely fly. Okay, these markets at the moment are very catalyst driven, right? So if we have a catalyst, an escalation catalyst, we can see easily these highs get absolutely purged. Okay, absolutely ripped through. So volatility risk is sort of elevated around these sort of events that I've just outlined. Okay. Now, from a fundamental standpoint, just to summarize, right, what are we doing, and what have we ascertained? We've ascertained that energy and geopolitics are keeping this inflation risk alive, right? They're keeping this inflation risk alive, and as a result of that, central banks are remaining cautious. Yes, they have a hawkish tilt, but as of now, it's still caution. It's not action. Okay. this week's data, especially PCE and the Fed, that is what I want you guys to focus on and see if that could shift sentiment very quickly. Okay, I want to see how the narrative shifts after that. Okay. Right, guys. So we've gone through fundamentals now. Let's sort of get into price action a little bit more. I'll give you guys my take on how I would like these assets to print and just sort of the narrative that I'm gonna adopt for the remainder of this week. Okay. So one thing I wanted to bring to your guys' attention is the metals market. Okay. You can see, I mean, across the board, assets yesterday seemed to have some sort of upside pressure. Okay, there was some sort of upside pressure. DXY was trading slightly lower. There was this rebalancing phase. Essentially, that's how I'm seeing it. I'm seeing it as a rebalancing phase on the DXY. I do still want this volume imbalance to get tagged. I do still want more of this volume imbalance to get tagged. And I feel like that's an appropriate target to have for the DXY, right? US 2-year for me is still giving me all the more confirmation I need to be a seller of these markets, okay? To be a seller of these markets, anything against the dollar, right? Oil, again, higher time frame. I don't see what's stopping us from trading to these highs, right? Me personally now, if I'm saying purely like intraday, I do want us to take this level or form some sort of buy side here, some sort of equal highs, induce sellers into the market, have more of a rebalance, and then come up to attack these highs, right? With gold, there wasn't much of a rebalance, okay? Gold and silver, there wasn't much of a rebalance, right? You can see we've had some sort of a rebalance early morning today, up to a key level. Me personally, I was looking for slightly higher, just to this 0.5 equilibrium, and then I would have liked to have been a seller. We didn't get that, but that's there's nothing you could do about that. But essentially what I'm trying to get at here is this idea of aggressive selling and not enough buy-side pressure when even other markets are looking to rebalance, right? These markets aren't looking to do that as much, right? So what can I assume? I'm assuming we're in aggressive sell-side delivery at the moment. Aggressive sell-side delivery, what's my targets? If you have been a seller throughout this entire range, I'd be looking to exit positions within this daily order block and these internal lows, okay? These internal lows for me are key. It's where we can see some form of short-term price action to the upside. Eventually, don't get me wrong, I would like price to trade into this wick, mitigate more of this wick, but for now, in the short term, in the near term, I do want to see price trade down to these internal lows within this daily order block, okay? Same can be said on silver. If we go to the daily, in fact the 4 hour will show it better. There's some nice equal lows to target here. I am looking for price to trade. Let me just turn my magnet off. I am looking for price to trade down to this level, okay? Eventually come down to this level. Now, Euro USD. I'm really liking how Euro USD is shaping up, me personally. Yesterday, I did go through this on the live as well. Essentially what we saw, right, was a price leg lower, a rebalance, and a second leg lower, right? This second leg, once we traded through it here, and we had this essentially, even if I go down to the even lower time frame, I saw these equal highs get placed in, and for me that gave me confirmation of, okay, we're probably looking to purge these levels and rebalance these early London sellers, okay? So the objective of yesterday's New York session was to essentially mitigate this sell side delivery. It was to mitigate this sell side delivery. Now, keep your eyes on, like I said, keep your eyes on these data prints. For me, they're going to essentially shape our entire narrative for the remainder of the week and the coming week, right? But I do want to be a seller. I want to be a seller on, especially on euro, down to these lows, of course. Oil, I don't see what's stopping us from trading up to these highs. In an ideal world, I'd like to see sellers induced here on oil, and if we do have a short-term price swing lower on oil, preferably down to these this clean traffic here, to either this 4 hour or this deeper 4 hour, right? So if we actually take this fib here and just drop that down to that low, you can see it lines up quite nicely with our discount level within this internal swing, okay? So a short-term price swing lower here, just to generate some sort of more orders at this level, so that we can come and purge it, for me would be ideal, right? But gold, for me, this is a very, very good level to target. I mean, you can have on the you can look on the 4 hour as well. It's lined up very nicely with a 0.62 standard deviation. We're looking for those overextensions, right? And these are commonly areas where we can anticipate some form of a reversal. Okay, we've aligned with the macro narrative. We still want to see this asset pricing lower, but it you can't anticipate clean sell side. It's not going to be one-way traffic the entire way, right? That's not how these markets work. So be prepared for rebalances. And for me, where is the most logical area to rebalance? It would be once we trade through this area and take some internal lows within this daily order block. Okay, that's it for today's weekly commentary. If you guys have any sort of questions or confused about certain topics that were mentioned in today's commentary, feel free to just drop us a message. We'll be happy to get back to you on that. And yeah, that's pretty much it, guys. I mean, stay disciplined, manage your risk, and especially this week, sort of let the data guide your positioning, right? Make informed decisions on the market, all right? Don't just blindly guess. Make sure there's real logic and real backing behind those trade ideas, okay? There should be some sound reasoning behind those trade ideas. But yeah, I hope to see you guys in the live later.